Good morning, welcome to Morning Outlook. This is Kim speaking on Thursday, the 4th of November. So, firstly, before I get on to the Bank of England, of course, we had the US Fed meeting yesterday, which ended up with the tapering starting at a mere 15 billion a month reduction in purchases. So there's something to, it's pretty much expected. Everything was pretty much bang on the line. We saw if you look at the euro here for yesterday, third. I mean, there's barely any movement at all through the day. So that pretty much summed that up, and they've left themselves in such a point. They did want to comment on anything in terms of what would make them start increasing rates. So it was left pretty much to the status quo. There we go. So moving from one status quo to another, and we've got the Bank of England today, and there is the question. Apparently a number of analysts are questioning whether it will be increased at all, but it's a 15 basis points is expected to be hiked by. That's what's being priced in. For that not to come, I think we'll see the pound being sold off, because it's, as I say, that's already priced in. For it to be there, it may still be sold off. Often you get a sell on the news, and this may be just one of those events. Depends on what comes with it, but I think all the central banks are being rather clever in trying to remain erring on the dovish side of for things, even when they're doing something. They're trying to keep things and keep the market believing that they're not going to start hiking rates at some silly rate. So anyway, there we are. That's for the Bank of England today. So euro wise, I'm just going to go through these markets quickly. Oh, sorry, we've got other factors. We've got OPEC today as well. So if you're trading oil, just be aware there's OPEC today. Sorry, I was just looking at this yesterday. It's just going to the 4th here today then. So Bank of England, 12 o'clock. Greenwich Mean Time that is now. So we've got that. We've got before all day actually. We've got the OPEC meetings. They're normally in the afternoon. I don't know what. Well, anyway, normally get some sort of something conclusion towards the later afternoon into the evening. Aside of that, then we've got Lagarde speaking at 1 p.m. Well, okay, we're not going to be around for that, are we? 12:30, right? Oh, yes, we are. 1 p.m. Just opening remarks at a conference. Okay, I can't see much coming from that, and I assume Bailey's speaking at the same conference. There we go. Oh, monetary policy. No, that's the press conference for the. Okay, so he does this press conference at 1 o'clock. Okay. Normally it's 12:30, but never mind. Anyway, or half an hour later. There we go. So there's today the key factors to what we'll be watching for. Let's look at the technicals. Euro pushed up a little bit yesterday on the data that it wasn't as hawkish of Feds, but it's given it back this morning already, and the way it's just sort of shaping up here, M for murder, it looks like it's on its way southbound at this rate. Post 8 o'clock we often see the differences occur. This is already through its daily pivot, through its S1, really pushed off south. It has got support where it's sitting at the moment in the bodies here, and a few prior high bodies further back. To me, it's looking softer. Maybe retracements could give an opportunity to sell into, but it really looks like it's could be in line to run back towards that 155 area, 1.155 area, I should say. The way it's sitting at the moment, it looks bearish. The pound, well, this could suddenly become very bearish. It's a difficult one to trade today. It's already bearish at the moment. I mean, we're seeing dollar strength. The pound's run into its 34. Put a little reversal in there, and it's selling off at the moment. This could be a slow one with the Bank of England at 12 o'clock. I wouldn't bet either way on this. I would just leave it alone and stay out until the news is known. We could always trade the aftermath. So I would leave that clearly. I won't try and second guess. Yen, dollar yen, where we've seen some again dollar strength this morning. pushing through the Asian session here, and it's pushing up. My expectation is a softer yen yet going forward, but we're seeing all sorts of horrible price action when you get days like this kicking in there. Well, that was yesterday. Okay, it was the Fed meeting that caused that, but it's slow for long periods, and I wouldn't be surprised if we see more. We have got a bit of divergence where we are at the moment, so we could just see it if it breaks that low of 114.11. I would expect it to maybe come back towards its pivot there, but I don't expect. I'm still sort of bearish on the yen, so bullish on the dollar here, dollar yen. Just expect more upside. Aussie dollar. Good morning. Today's the 4th. Have I got the wrong date there? Okay. Did I say the 5th? I may have. Right. Okay. Let's look here. Oh, I didn't change the date on the other thing. Right. Sorry. Aussie dollar. Sorry. Aussie dollar breaking southbound here at the moment. And again, I'm erring on the softer side of the dollar. We have had a bit of divergence around the lows on the RSI yesterday. It did pick up a little bit, but not very far. It's probably triggered the upside of that. We'll see. Longer term, I'm still more bullish on the Aussie than a lot of these pairings. I just think that, again, it's a central bank that's underplaying things by quite some way. Keeps rates down, and most of the central banks seem to be playing the same old game. They've all got high inflation, they all say it's temporary. We'll see. Anyway, for now, Aussie dollar, you can't fight against the technicals here. Well, so still looking relatively bearish here. We could change things here. It's putting in a key reversal bar here, a bullish engulfing bar there. Maybe it's got a little bit fuller through this morning, but there you are. Aussie. Canadian dollar. The Canadian dollar flew up yesterday, softening up through the Fed, but came all the way back and strengthened up since then. So it's to me, it's still one of the stronger pairs. We've got OPEC meeting today. It may have a knock-on effect onto the Canadian dollar because of what the reliance on oil prices. So we'll see how that develops. I can see a decent trend running through here on the 4-hourly chart, which becomes quite a quick key trend line. Along with all the key moving averages here, a break below, well, say 23.75 would be a more bearish focus for me on the dollar CAD. Okay, dollar CAD, right, euro yen. I'll just have a quick look at what's going on there. So euro yen, again, it's just showing the weakness of the euro actually as well at the moment. The yen's not particularly doing too well, but the the yen's doing better than the euro at the moment, and well, choppy, horrible. Nothing much. Actually, it didn't look too bad on a shorter time frame. Bearish again, bearish engulfing key reversal bar, or continuation bar in this case. Maybe we'll see a bit more downside on that. It's yeah, looking quite weak. Right. There's nothing much on those currencies. I will be in our trading room, or we'll be going through the other pairs later, but for now, there's the majors. Let's have a look at the commodities. Gold. So gold wise, we've got not a great deal here at this stage. It's just rolling over a tad at the moment. It took a real hit yesterday initially, but it sort of picked up later in the day there. When it's a funny old one, gold, in terms of it doesn't like it's good against inflation to a degree, so you get it rallying up, but it doesn't like high interest rates or anything to do with rates, and that brings it southbound. Well, the rates weren't changed, and they were playing a dovish game, and we saw the bounce here on gold. Longer the way it's shaping up, there's there's got to be more talk, maybe in the next Fed meeting, but there's got to be more talk of more tightening, etc. And this may only be bad for gold in the longer run. Right. Okay. Okay. Western Texas. Okay, Western Texas, looking at oil then. Well, we've got OPEC meeting today. Oil again sold off yesterday. There is largely expected there'll be more volumes made available to be pumped, and that's probably pretty much priced in. Seeing a bit of a bounce at the moment. I'm going to steer clear personally until OPEC's over, and I would leave that alone. Yesterday, just really a continuation. My sort of favourite time to trade it, 2 o'clock. Well, it was already selling off at that point. To be fair, I'm not really keen on trading it when I know there's OPEC meetings around. I was looking still for the upside, and there's certainly nothing occurred there, but I will leave this until this meeting's out the way today, and then we can get on and trade again. Right, that's that. Okay, and let's have a look at the cryptos. Well, Bitcoin came off yesterday. If I can get Bitcoin on, that would be good. Bitcoin came off yesterday whilst the obviously dollar was strengthening, and then, well, it recovered most of it. It's in a range here. Once again, if it can consolidate around this range here, we've got more chance of probably a decent kicker up again, and another wave up. But at the moment, it's slow. Ethereum was really going through that, and continued making new highs yesterday, selling off a little bit this morning. Again, when you go through these new high periods, there's no surprise to me that we see some profit taking going in there. We'll get buyers starting to come into the market because it's broken the prior highs there. It's and they'll be looking to try and join it, but it's a dangerous area. Decent retrace would be needed if I was looking to buy into Ethereum there, but we'll see. Ripple, like yesterday, likewise it pushed up solidly, held up. Today, well, it's pushed up this morning and pulled back a little bit. Again, we're seeing dollar strength through the market, so as these are dollar backed, so no great surprise there. Looking at the indices, starting off with the CSI 300, well, it's bounced back into the range at the moment. There was with the way these markets are running at the moment, there is this sort of bullishness coming back into a lot of equities. I wouldn't be so convinced in holding this particular market. I think it's very risky where it's sitting. As I say, I'd be bearish on that personally. The Nikkei did had an inside bar yesterday, effectively a down bar, bounced and gapped up this morning and is pushing up strong. This may be a sort of an overrun from the US markets in terms of what's happening there. FTSE this morning already up, still erring towards the bullish side on the FTSE. However, of course, interest rates are not good for equity markets, and at the moment, though, the interest rate increases are so tiny, I don't think they should have a lot of effect. It's just the longer term rates, which in terms of as they increase time and time again, that will bring equity markets down. But at the moment, it shouldn't have a lot of effect. And of course, I say this time and time again, when you're looking at equity markets, high interest rates are bad for them. Increasing interest rates was inevitable, so that will, to a degree, the markets have got to accept that. However, there gets that point where there's other safe investment opportunities, and the money starts running towards the safer investment opportunities at that time, and so we see money moving away. We've had a long period where there's been no available returns, really, or very little returns on bonds, etc., and really traders have been looking elsewhere, and the equity markets is the obvious. And as a consequence, we've seen equity markets making new highs, particularly the US markets making new highs almost on a daily basis at stages, because where else is the money going to go? So, and get it some sort of return. So that's where it's going. For now, as I say, these rates are quite low, quite modest, and we could still see further highs being made. It's when the serious talk comes in of more rate increases that it will have a bigger effect, although the big money will start moving quite early. Right, okay, Dax Futures again making new highs here this morning, pushing through, gapping up. There'll be some trying to short that one, I'm sure. Traders spend most of their time shorting the opposite direction of the market, and they'll probably be doing the same on that this morning. So that's where we are with DAX at the moment, and the CAC. French market's also just pitched into new high there. So the bit of the laggard there is the FTSE. Probably no surprise with the news out later, the Bank of England meeting. S&P American markets, well, new highs yesterday and new highs today already. So we're still seeing money running into that. That has, as I say, the interest rates haven't put the investors off at the moment from the US markets. And there we go. There's the Nasdaq again, new highs pushing through this morning, and the Dow Jones made new highs yesterday, and looks like it's not far off new highs this morning. So again, but there is this overall bullish tendency towards the equity markets at this stage, whilst rates are being kicked down the road, basically. Right, that's pretty much it. Hopefully that answers your question. I will catch you in the morning. I will adjust the date on this video as well, of course, to the 4th, and be done with it. So wish you, as I say, wish you all a great day. Bye for now.